For that, let's bring in Tuna Amobi from CFRA Research. He's got a buy rating on the stock, and CNBC.com media and technology reporter Alex Sherman as well. Good to see you both. Tuna, I'll come to you first. What's your take on these numbers? Are you a bit disappointed, particularly that decline in US-Canada subscribers?
Yeah, good afternoon, Wilfred. There's no question that the numbers were a little bit, soft, especially on the Q3 guidance. And even in Q2, I think it seems pretty clear that Asia Pacific is doing a lot of the heavy lift in terms of the concentration of net adds. We would have liked to see much more dispersion. I think Julia was just making the point that US and Canada is showing signs of saturation. So we couldn't agree more. On the other hand, I think there are still some positive takeaways from the earnings. The pricing power is still there. We saw the ARPU increase. And also the fact that both engagement and retention are still above pre-pandemic levels. So while we think there is no question that the competitive intensity is taking hold, there's Netflix, we think, is doing its fair share to hold its own. So we think the runway is pretty still long, especially internationally. So we're not by any means calling a new normal here, Wilfred. We still think that, looking beyond into Q4 into next year, as things start to normalize even more, Netflix is going to be able to capitalize on the huge investments it's made in a lot of the international markets, local language productions, and things of that nature. And as far as video games, that's one area that could portend some type of opportunity long term.
Alex, what stood out for you?
The key figure, I think, here was the third quarter guidance figure of 3.5 million new net adds. Julia mentioned it at the end there that analysts were looking for about 5 to 5.5 million net adds in the third quarter. The reason this is important is the whole narrative around Netflix this year has been that there has been a lot of choppiness because of COVID, production shutdowns during quarantines. But a lot of that kind of prized content is coming back in the third quarter. There's Kissing Booth 3, Sex Education, Money Heist. These are big name Netflix originals. They're all coming onto the service in the third quarter. So the thought was that as the content comes back to the service, so will the eyeballs. So that 3.5 million net ad number coming in so light compared to analyst estimates is a little bit worrisome, I think, in terms of the broader Netflix narrative that people will surge to the Netflix originals. We'll have to see in the third quarter if maybe Netflix sandbagged this a little bit and the number ends up being closer to that 5 or 5.5 million mark.
Alex, as the M&A reporter in this whole space, wanted to ask you about their comment on M&A. They referenced the Warner Media Discovery deal, says that all this consolidation hasn't impacted growth much, if at all, and also said that Netflix doesn't view any assets as must-have. And I was just wondering how you were interpreting that.
Look, Netflix has never really done an acquisition of significance ever. So the idea that they would come out and say, look, nothing really appeals to us right now, that's very much in line with the DNA of the company. The fact that they're getting into video games, that's actually really big news for Netflix because they're so focused on just delivering original content and, of course, spending a lot of money, billions and billions of dollars on licensed content. To their point about all these other deals swirling around, I agree with them. It really hasn't affected Netflix's overarching growth all that much. It's more the sort of the Disney Plus push, the invention of streaming in general. As all of that plays out and these streaming services, sort of become part of the culture, we'll have to see the long-term effect of that. Netflix argues it's good news because overall they put out a stat, 27% of U.S. viewing is streaming as opposed to 63% still linear viewing. So in general, you'd think, okay, as all these streaming services come to fruition, that's actually good news for Netflix because more and more people will cancel cable. The flip side of that, of course, is maybe as these streaming services add content, people will stop watching Netflix and start watching the competition.
Right, which of course they don't reference. Tuna Amobi, Alex Sherman, thank you both very much.
Shepard Smith here. Thanks for watching CNBC on YouTube.